All right, we are live. If you guys wouldn't mind, as you jump into the stream, if you would kindly just share it on social media, give us a like on the way in. Did the thumbnail get screwed up? We got the old thumbnail on there somehow. How'd that happen? Good afternoon, everybody. How's it going?
What up?
What's going on?
Welcome to the stream. Hopefully everybody's having a good day so far, despite the bit of sideways action on the SPY. Been watching the market do a triple top pattern here on the on that 390. Like I said, I'm kind of expecting at this point that the market is about ready to turn around. It's bounced off of its 200 period moving average all day on the 5-minute, and it's spent only a little bit of time above the VWAP. I think that I am ready to go short on the market again. Before we get started, for everybody who is jumping in that's not a part of the Discord, if you wouldn't mind leaving a like on the way in on the stream and subscribe if you haven't already. And do us a favor and share us on social media so that other people can be part of the conversation too. We always appreciate having more company. And with that, let's go ahead and jump straight into it. I've already got ticker requests for absolutely everything, so we'll cover everything all at once, all right? Let's see. I see we're going to cover the market here in the upper left-hand corner. Let me go get AMC up here. We'll get Biora down here. IMPP, I am still bullish on. It's just kind of bottoming out at 42 cents for those that are curious. But at the moment, it's just kind of hovering. So I'm going to leave it there for now. And let's see. AMC, Biora, and Exela. So let's go ahead and cover these one at a time. How can I maximize this? All right. So Exela is starting to cross up through its 20-period moving average on the daily, which is an excellent sign. On the 1-hour chart, we've already crossed above the 200-period moving average. Nice bullish sign of reversal. Exela, or I'm sorry, I'm looking at AMC. What the hell is wrong with me? I'm looking at AMC. I'm sorry. AMC crossed through its 20-period moving average on the hourly time frame, so AMC is starting to look nice and strong, bouncing off of the lower band of the VWAP ATR band, and now it's currently hovering above VWAP very nicely at $15 flat. Looks like $14.96 right now. So AMC, I flipped. I have been looking to flip and day trade calls and puts. If you're looking to do the same right now, AMC is starting to look pretty bullish, but I expect that there will probably be at least a little bit of rug pull on the near term. So expect AMC to return back to the 200-period moving average at some point in the next week. That's just kind of seems to be what what the market makers do with this, and I'm trying to help people spot the weaknesses in AMC, and if you are day trading it in order to accumulate more of it, just know that there is some slight weakness in AMC at the moment if it breaks down below the VWAP. Right now, it's formed a nice bullish pennant. So at the moment, AMC is looking very strong. But notice that volume is declining, so just be on the lookout for that. We had strong volume all throughout the day yesterday. Volume is in decline today right now. So don't expect the strength to stay here. We might get a little bit of a pop near at the end of the day. You know, it is power hour, but just be on the lookout. If AMC breaks down below this lower band here at 1470, then that might be a sign of bears regaining control. So just be prepared for that. Biora is also showing some great strength. And heads up, I'm going to be publishing a video that I filmed in advance of this stream here in the afternoon after the closing bell. The data on Biora shows that their latest human trial study was a massive success, showing no adverse effects and all payloads delivered successfully in all human trials. They recovered 39 of the 46 or so smart pills that they use with their drug delivery system. That is an outstanding outcome that I've been looking forward to seeing on Biora for a long time. So right now, Biora is the only smart pill solution that has been developed for intravenous delivery of drugs and also direct payload delivery to the intestinal tract. So that's novel technology. They have all the patents for it. It's basically, in my opinion, billions of dollars worth of intellectual property, but I'm sure that a valuation will eventually come out once they are prepared to take that to market. That process will take some time, at least another year, I'm estimating, for them to actually get through the process of, getting all of their patents in order, putting all of it together into workable solutions, and then going through human test trials and clinical trials for FDA approval. Once we get past that, Biora is likely to be a new case study in major biotech successes.
Do with one of their payloads in my intestines, I think.
Come again, Dave?
Possibly. But joking aside, I've had a lot of stomach, and gastrointestinal issues. So.
Yeah, Biora's pill specifically would be great for anybody suffering from ulcerative colitis or Crohn's disease. Is that, you don't feel free not to share that information, Dave, but is that something that you deal with?
No, it's not. I mainly just have explosive diarrhea. I'm joking. I don't. Well, sometimes I do.
And he declares in front of hundreds of viewers on stream. Thank you, Dave. That made my day.
No problem. My stomach's feeling all right today. If you're interested.
All right. So, for Exela Technologies has they recently announced a lot of good things. For one, their share buyback is still in progress as far as I know. I don't know if they've actually completed their $100 million offering for their share buyback, but if they haven't, right now, if Exela were to attempt to buy back all of their stock, they could actually buy back their entire float for about $46 million based on its current traded price versus its float. So Exela is, shall we say, undervalued. The company overall is finally getting its debt adjusted, and they've moved almost all of their debt to long term through a new deferred financing agreement with PNC Bank. That's deferred $160 million. Somebody keep me honest here, make sure I'm actually quoting the correct price. It was either 130 or 160 million, but anyway, They deferred a massive portion of their short-term debt, converted it to long-term debt, which gave them a $6 million annual savings on interest payments. And that's going to give them an additional cash runway on all of their financing that they've been, that they set up over the last 3 years. So that's an extremely good outlook for them. The other part that was extraordinarily beneficial was they have a new agreement for a 5-year contract with XBP, which is one of their partner organizations that they were doing some work for their financial payment processing and transaction solution. That contract extends for 5 years and is going to provide, what was it, $60 million? I need to go and pull up the actual news here. Let's see. $136 million contract. So nice, big contract. So all of this good news hitting Exela at the same time, I'm baffled as to why they're still trading at a dime per share. It makes no sense to me. Coincidentally, if you look at the short exempts that keep hammering the stock right now, Exela is actually way undervalued. But it seems to also be the target of some ire from market makers, given that we see nonstop short exempts hammering the stock. I'll go ahead and pull this up here on our Scourge bot just so that everybody can see it. So if you take a look at this chart right here, we have short exempts in Exela that have peaked recently at 9% of the short volume traded back on, what was this date? This was the 1st of July. The short volume over total volume has consistently been above 40% for the last week of trading. And what we see is that the short volume has been massive against Exela, inexplicably so, given the amount of good news that they've had. The stock is continuously getting hammered, likely because there is speculation of them getting delisted in August. So if the company doesn't come to a solution for how it's going to raise its share price, then it would seem that the company is going to get delisted. However, they already agreed to buy back when the share price was trading at more than 40 cents per share. Exela announced that they were willing to do a $100 million buyback program with a minimum share purchase price of $1.25. So they were willing to pay. They were willing to pay a 150% premium on the current market price of their own stock to buy back $100 million worth of stock. And the share price is still in decline. So I'm looking at this like this makes absolutely no goddamn sense. So Exela wants to buy back basically their entire company's stock at a huge premium. And now it's since that announcement about, what was that, 3-4 months ago? Their stock price has fallen from 45 cents down to a dime. Like 10 cents on the dollar. Seriously? So if Exela wanted to, if they still had that $100 million offering, they could literally just go into the market right now and buy up all of their stock. Just all of it. They could pay for the entire common stock and still have $55 million left over at this current price. So where that offering is currently at, we don't know. They haven't made any statements as of late where that offering currently sits at, if they've completed that buyback or not. The one thing that we do know is that they did manage to convert several Class A common stock over to Preferred B common stock, Preferred B stock shares. So that conversion did actually separate Exela into 2 ticker symbols. There's Exela P, which is currently trading up right now. So Exela P is trading higher after that announcement that they were doing a share conversion and buyback program back in March. That announcement came back here on the it was like the 21st of March. The actual conversion took place starting on the 23rd. The price declined from about $12 a share to $4 a share at the low point and has since recovered by about 100% up to $7 and looks like $7 flat right now. So Exela's preferred stock is actually moving quite nicely compared to its Class A common stock, which makes me wonder what the hell is going on with the Class A's. Because right now, they have enough money sitting on the sidelines waiting to go and buy the entire float back if they wanted to. I guess my only question now is, are they going to allow the Class A's to get delisted? I don't understand the motivation for doing that, if that's what their plan is. But in any case, between the Class A common stock getting pushed down to 10 cents on the dollar, the preferred stock trading at almost $7 per share right now, and also barcoding just the same as all the rest of its tickers, including its warrants. All of them are barcoding right now. I don't understand it. I don't understand what's with the poor performance, but I have a strong suspicion that all of these short exempts have a great deal to do with it. But anyway, analyzing the short exempts right now, I can see that tomorrow, or I'm sorry, not tomorrow, but Monday will mark T+6 as of the final day of trading, where we had a 12% short exempt ratio, where more than 4.3 million shares were sold short exempt.
You know the saying about proper planning preventing this poor performance.
I'm sorry, Dave, I'm having trouble understanding you.
I don't know whether you have the saying in the US that we have here, that the proper planning prevents piss poor performance.
I've heard that one before. I don't think that's a common idiom here in the States, but I've heard it before, and I agree with it completely.
Certainly.
We have a military turn of phrase that says a terrible plan executed immediately is better than the perfect plan executed too late. In my opinion, they need to do a reverse split. I know nobody likes reverse splits because that's just an opportunity for bears to go, look, it's so weak, hammer it now. But like, they've already short sold the stock to hell and back. Like, let me actually go pull up my Ortex data on Exela just to illustrate my point. But Exela is already heavily shorted. Let's go pull this up. So Exela, currently sitting with about 50 million shares on loan, with 11% of its free float loaned out, and almost all of it is sold short. So it keeps dancing off of 100% utilization. Somehow they keep finding more shares available to short this, even though the shares have been consistently going up, and every time it hits a ceiling on utilization, they find a few million more shares to borrow for short sales. So I don't know if this is just I'm not going to go so far as to say that this is naked shorting, because we haven't been sitting above 100% utilization with the on-loan shares just going up and up and up and up the whole time. But I will say that the amount of shorting going on this company is excessive. And between that and the short exempts showing such huge amounts of percentage of the volume traded in Exela, I will go so far as to say that the market makers are absolutely part of the problem. They are targeting this stock, and I'm certain that they're profiting off of the downturn. Market makers make the best money out of frequent transactions, and they get most of that by trading ticker symbols below the $1 level. Stocks that are traded below $1 on the NASDAQ are at risk of delisting, and when that happens, they get moved to the OTC markets, and then they can bring the stock even further down where it trades below a penny. They call that the seller, where market makers are basically able to perform a certain type of arbitrage that's commonly referred to as seller boxing, basically where they beat the living hell out of the stock by trading it back and forth using shorts at fractions of a penny. And the market maker makes huge profits off the spread because they can widen the spread down there, especially on the OTC market, which is entirely unregulated. Let's go catch up on failures to deliver. Still not many. At the very least, they should be reducing their float, man. Like, take some of these shares out of the float. That would go a long way. Exela needs to do a buyback, for Christ's sake. If they would, you know what would actually turn this thing around is if Exela just announced, like, hey, we bought back our entire float. And then retail's like, well, then how in the hell am I holding on to like 100,000 shares or 300,000 shares or whatever people have right now? I do know several people that have spent more than $10,000 in stock just in the last couple of weeks, or at least anecdotally from, you know, Reddit threads. Obviously, that can't be proven without some screenshots or at least some validation from broker transactions. But, you know, for some people that I do know that there are plenty of people that are willing to take a $1,000 bet on a stock like Exela, knowing that the market maker has been forcibly keeping it at this price level. Because this has an opportunity to turn around on them quickly. Well, let's go ahead and bring it back to TradingView and let's catch up with chat. How's everybody doing? Magic Potato. I love that. I love that name. Is that like a magic lamp for the Irish? I'm allowed to say that because I'm Irish. It's not racist.
We've got another member named after a potato now. What happened? Are they still a member?
Potato, the magical spud, the sacred potato.
You say potato.
Potato.
Wait, no, I say potato. You say potato. That's the one.
Flintster, I saw you were asking about GMVD. I've actually been looking at GMVD also, and I saw this breakout here. This I suspected was a liquidity hunt, but since it's been holding up above support, it tested it here, broke down, and then retested. This is no longer a liquidity hunt. This is support. So it could still break down. This isn't proof. It's not definitive that it will hold up this support, but it's not a liquidity hunt at the very least. Looks like I got to go ahead and make a few trades here. Excuse me. So what's everybody else up to? What other tickers are we looking at? I've been looking at, I've also been looking at Mullen and BBIG. I'll pull those up here in just a minute. I just have to go ahead and shuffle around some shares of something here on my other broker.
What are you looking at on BBIG? You trying to scan the barcodes?
I did see that tweet. Somebody actually scanned the barcode. It was pretty hilarious. Okay, let's see.
Has anyone got a barcode battler?
The barcode battle. Oh, what a sad, sad state of affairs.
They're probably worth something now, I imagine.
I imagine so.
I wonder if they've got an app. They could easily have come out with an app.
Okay. Alrighty. Cool, got my fill. Currently looking at a few other plays just for the sake of staying diversified as well. I'm trying to stay with trend in the market. I'm actually going short on a few things, and I want to give credit where credit is due here. But I'm just not so sure if I should mention the person's name on stream. But I picked out Lowe's for a put position, and we're going to play that until the 5th of August. Playing these at the money. Lowe's is, if you don't know the company, they're kind of like Home Depot. They're a home improvement store. They sell tools, lumber, metal, pipe, finished goods, construction materials, so on and so forth. Basically retail. They've been on a bit of a tear lately in the past few days. But overall, the market is pretty bearish on consumer construction and construction materials. Price of lumber is in decline, and I'm bearish on the housing market overall. I know a lot of people are trying to sell their homes. They're trying to get out quickly, and I have a feeling that that's going to reflect poorly on companies like Home Depot and Lowe's, as well as other consumer materials. I'm also bearish on like lumber companies as well, or lumber REITs. So this is one of the other shorts that I'm taking in the market, in addition to DRV, which I'm actually thinking about averaging down in. Let's go take a look at Mullen, and we'll go and take a look at BBIG as well. Saw a lot of people asking about Mullen. Okay, nice volatility spike. We're trading at back above the 200 period moving average on the 30-minute. Very nice. If we could get a nice crossover of the 50 and the 200, that would be fantastic. Mullen, I have been, these are expired. Mullen, I've been really frustrated with the lack of action from the executive team. David Michery, or Michery, however you say his name, has not kept his promise, as far as I know, about those F500 vehicle contracts that he said he was going to make a statement on back in the second quarter. Somebody keep me honest if he did say something and I just wasn't in the loop. But that was part of my frustrations for the just basically not responding to retail's requests for them to make a statement on those when they had already promised to make a statement. They're actually that's technically a securities violation. We won't tell the hedgies that, but ENJY, please. Hey, I did make mention of this in the Discord. I'm sorry that I'm only getting to this just now, but yeah. ENJY, I am out of ENJY, and I advise. Well, I can't advise. This is not financial advice, but ENJY is facing delisting this next week, July 11th, from Nasdaq. So they are facing delisting, and they have stated they will not be disputing the delisting. They will not appeal the decision. So on July 11th, they are going to be delisted from NASDAQ. They will move to the OTC markets. They are declaring Chapter 11 bankruptcy. The company is going off the market. So if you want to get out, this is the time. It's not a trade anymore for the long side. The trade broke down.
Being Monday, just in.
Yeah, that is happening Monday. They will no longer be on the exchanges Monday. So it's really this is the time to exit the trade if you're still in it. I'm sorry. This was a high risk trade. We got in at 20 cents. Most of us took profits up here at 50 cents. That was a great volatility spike. We took our profits. Most of us jumped out. This is not one of those diamond hand trades. It wasn't like that. And this was one where I was trading with stop losses and all. All right. Let's catch up with everybody else. what will happen with the GME split? Well, basically, GME is going to split its stock into 4 shares for every 1 share. So if you're holding 1 share of GME, that'll become 4 shares, and the price of the equity will be divided by 4. So if it closes at, we'll just use a round number of 120. If it closes at 120, then the stock will open up on the next trading day at $30 per share, and you'll just have 4 times more shares than you had before. On its face, it doesn't really do anything. It doesn't change the market cap of the company, but it does bode well for the company overall because it's a sign of strength. It shows that they are bringing down the share price so that they are able to appeal to a broader base of customers. It benefits retail in that it makes the shares more approachable, cheaper, even though it doesn't change the company's valuation in any way. Psychologically, we respond to a cheaper share price positively because it looks cheaper to us. And you shouldn't trade based off of this by this alone. Like, you shouldn't look at a share price of a company and that, like, just look at it like, well, this one's $10 and that one's $20. I'm going to go buy the $10 one. You shouldn't trade like that. You should look at the valuation of the company versus its float and what the market cap says. And when you trade like that, that's how you trade according to fundamentals for the value of the company. That being said, trading with the knowledge that when the company splits its stock, it is seen bullishly, it's believed to be a positive move, then it is an indication that, or it's, you can use that as an indication as you should, buy more or, anticipate a bullish move. If it's a dividend instead of a split, will shorts have to go into the market and buy 4 shares? Well, it's not a dividend, but if it was a dividend, if for every share you had in GameStop, you were receiving an additional 3 shares, then yes, shorts would need to provide either cash in lieu of shares to their borrower, or I'm sorry, their lender, or they would need to purchase the shares out of the market in order to deliver all of them. Come again, Dave?
I was going to say there's a difference between a cash dividend and a share dividend.
Right.
Not just the obvious on the face difference, but there's a difference in terms of the regulation. I mean, a share dividend is not treated like a cash dividend. So if you're short on a stock and there's a stock split, the stock splits are always, as far as I know, the stock splits are always done via the issuance of share dividends.
Mm-hmm.
So you think of share dividends as one term, share dividend like in quotes, and the shorts are not. If you're short on a stock, you're not responsible for. Yeah, basically what I'm saying is what you said. I believe is incorrect.
So you're saying that the shorts are not obligated to make a delivery of shares to the lenders. The company does it.
That is well.
Sorry, Dave, you're cutting in and out. I can't really follow you.
I mean, on like broker systems, all that would happen would be, they would get an update saying there's been a split, and they would just do the relevant calculation.
Right, I understand that applies for splits, but since the person is asking about a share dividend, I was under the impression that for a share dividend, because the short had to borrow 1 share of stock in order to sell it short into the market, that in order to return the full notional value to their lender, because the lender is still entitled to that dividend, therefore the short would be obligated to deliver either those shares or cash in lieu of shares.
Yeah, but the thing is that the broker's systems will adjust the short positions automatically.
Okay. Gotcha. Good to know.
Here's a question. If they borrowed shares to short, those borrowed shares would be split as well. However, if they used market exempt shorts, those would not qualify for any. I mean, they wouldn't get any. Would that get any same or special treatment, or would it just get muddled in the water? Or does that? I mean, is that what forces the count? Or you know what I mean? Because like, if you're borrowing shares from a brokerage and there's a split, then your one share becomes 4 shares. But if those weren't borrowed shares and those were market makers creating short exempts or something of the like, how would those get?
Those 4 shares are worth exactly the same as that one share was. That's the thing. So that's why the broker would just adjust the short position.
Gotcha. Well, that's good to know. Hey guys, I just had a blast from the past. We'll have to do some more digging into it because I want to make sure that we are understanding it clearly, and not just jumping into the jumping into some spreading misinformation. I don't want to do that. But hey, I just got an interesting message from an old friend, Cat Moores. Cat just messaged me, and he pointed out an interesting move on, oddly enough, Nikola. So Nikola Corporation, which most of you probably recognize as a popular EV maker, just had a very recent print of a massive position change of the $5.50 calls. For whatever reason, there has been a 3,000% increase in the open interest of those calls.
Are they? Do they have something other than a rolling chassis? Finally, are they going to roll another chassis down the hill? Or
I don't know. I don't know what the Nikola deal is. I don't know what the deal is, but I'm about to pull up Unusual Whales to verify it. But this is some of what Kat just sent me. I'm going to go ahead and pull this up.
I went on their Twitter page the other day and looked at their.
Oh yeah! Oh wow! 40,000 contracts for 2 Fridays from now. One. Oh my God! What the hell? Who's buying these? I don't know what's going on with Nikola, but I'm wholly and entirely interested.
I say tinfoil hat theory. If you go on their Twitter page and click on their banner and then zoom in to the driver of the truck, is it just me or does that look like someone?
Do you have a link there, Dave?
Yeah. It's very pixelated, so there are probably a lot of people who look the same when. Where should I put it? In Film Studio?
Yeah, drop it in the live stream chat.
Chat.
Yo, TD.
Yeah, what's up?
Back to the Nikola. What's up? I'm interested now. You got my attention.
Yeah, so this is the data that Cat Moores sent me. He messaged me while we were streaming. There's 2 pairs of $40,000 purchases of contracts for July 15th and July 22nd, and together they amount to like what's this, like that's almost $2.5 million, maybe a little bit high, a little bit above $2.5 million bet. And that was a floor trader. That's kind of wild to me. Like that's a big dick swinging bet right there. They made the original trade on the 5th, which was what was that? Was that this Tuesday? They bought these 5.5 strike calls. And those are expiring today, but I imagine that they profited big time off of those because those were only trading at 9 cents on the ask at the time. The spot of the trade was 10 cents. So they went above the ask to get all of those shares. What are those currently trading at now if I pull that up? If I look at the
39
options.
cents.
Yeah, so they made like a 300% profit on that trade alone. And now they've converted it, rolling all of that money out to next week and the week after. So this is a big trade. This is a big trade. They made that trade on, let's see, they made those trades back to back to back once each day. They did it once on the 5th in the afternoon, 2 minutes before close. They did it again the morning of the 6th, the morning of the 7th, and then again yesterday at 2:30. Oh, man. I have no idea who that is. It looks like, I don't know, it could be Sean Connery. It could be Elvis's ghost. I don't know.
Hey, TD, check out the live stream chat. I found something in their recent proposal for. They're asking stockholders to vote on stuff right now. It's in. I posted the screenshot of it in live stream chat.
Thank you very much for the heads up. Okay, so the proposal, approving proposal 2 is very important as it will allow Nikola to increase the authorized number of shares of the company's common stock from 600 million to 800 million, which will provide Nikola flexibility to support future growth and development of the business. Stockholders have voted overwhelmingly in favor of Proposal 2. However, the company is less than 2% short of the outstanding shares needed to be voted in favor of Proposal 2 to pass. So, Nikola has adjourned the meeting to allow stockholders more time to vote. Okay, so it seems like the vote is likely to pass, but they are adjourning temporarily until the vote is receives enough time to get through. So they need current stockholders to continue voting yes to basically authorize more shares. It is not a guarantee of dilution. It is just simply authorizing a larger number of outstanding shares by about 200 million shares that they could dilute in the future. Generally speaking, it's good for the company to have that flexibility as long as they're not diluting themselves to death. This could be a very beneficial trade, though. Like just looking at the amount of premium that was put bullishly, pointing to puts and calls for 550 for next Friday. That's big. Like this has just suddenly become the hottest chain on the ticker, and it was all made by just what? It had to be one trader. Somebody knows something, so I say I'm all for it. That looks good to me. Let me go ahead and bring us back over to TradingView. And let's do a little bit of technical analysis on this one. Let's bring us ourselves out to the daily chart. Okay, so right off the bat, I see we have a big falling wedge, really big falling wedge. Nikola's been declining for a while now. Currently sitting at the bottom and just recently bounced off of that that low of $4.50. It looks like very close to it at least. And it does look as though it's following a pattern, actually, now that I look at it. So Nikola has multiple times in the past where it will trade these triple bottom patterns with a rising top after a bear flag. So I see this bear flag here, and then I see a triple bottom. And here I see another bear flag. And now we have a inverse head and shoulders forming. So we've got a shoulder here and a head here. It looks to me like it could form it could form an inverse head and shoulders to complete at $6 here in the near term. So this is a pretty risky trade, just to make sure everybody understands. That is a very risky trade to take a bet on stocks rising rapidly over the next 2 weeks. So you want to watch this closely. If the stock does just suddenly shoot up, then that would be fantastic. But you're trading going on into next week. It's already been on a 3-day rise, so it's a great move. It's moved really, really nicely. Big engulfing candle to start out the morning on the 5th of July, and it's had higher lows every single time. The MACD is still swinging to the positive, and it's just about to cross right now. In fact, I think it did cross. Yeah, it's just below the signal, actually. So the fast line is getting ready to make a positive cross above the slow. The STC indicator, which this is similar to the MACD, is a momentum indicator, is going green, and it's a slow green. So this one looks to me, let's compare it to a previous move. So what I've seen with STC indicator is it will have this, it'll go green to red, green to red back and forth as it goes through consolidation phases. And then after one last consolidation of forming these bottoms, such as you see here, just a solid set of bottoms where it just can't break below, then it go ahead and goes and just makes a run for it. And it looks like it's getting ready to do the same thing. Nikola had this similar move where it bounced once, consolidated for a week, and then bounced again. So I'm bullish. I'll go for it. Why not? Thanks, Cat Morris. If you're listening to the stream, dude, thank you so much for calling this out. This is excellent. We miss you. Come back, homie. Video editor in chief, and also the chief analyst. Let's see. Trying to delete all of my crayon drawings there. Okay. Yeah, this triple bottom, very similar to this inverse head and shoulders. So if we get another move like this, could complete to $8.69, $8.70 if it reaches the top of the wedge. That would be a hell of a move. The other possibility is it could be completing a cup, but I won't speculate much further than that.
So I was doing a little digging, and I saw some stuff that a few of the other folks in the Discord were posting about the GME split situation, and I just pulled up the July 6th SEC report that they put out, and it states that they're doing a 4-for-1 stock split in the form of a stock dividend.
Okay. Each company's stockholder of record at the close of business July 18th will receive 3 additional shares of the company's Class A common stock for each then held share of Class A common stock to be distributed after the close of trading on July 21st. Copy of the press release filed Exhibit 99.1. Okay, cool. So it is a stock dividend. Interesting.
I feel vindicated.
Yeah, I guess you are right. I guess it is a stock
appreciate
dividend.
that, J-Roll.
I was.
With that in.
Thank you very much. Thank you. Coming in clutch with that, DD. Thank you. All right.
Can you pull up any 8K announcing a share split that does not refer to it as dividend? could you pull up any 8K filing for announcing a share stock split that does not refer to it as being in the form of a stock dividend?
Let's see here.
While you guys are pulling that up, I want to thank Garrett Tovey. Thank you so much for the $10, dude. Love this group and information given. So welcoming and eager to help newbies. We'll continue to learn and support. Keep it up all. Thanks, dude. Really appreciate that. All right. Move GME to the blockchain. I would love to see the stock market traded on a blockchain system so that you could prove the location of all issued stock. But sadly, I don't see that happening anytime soon. That will be many years in the making. KG Jack Stocks Pro. I need help with Exela. Well, I already covered Exela a little bit earlier today. Oh man, Enjoy is getting hammered. Again, this is just your friendly public service announcement, guys. Enjoy Technology is getting delisted. It's going to happen. So I don't suggest holding on to that anymore if you're not out of that trade yet. All right, so Exela we've already talked about a little bit. The financials are still not in the greatest of shape, but I will say that Exela has been more than beat down enough. It's been bottoming out at $1.20 a share. Or I'm sorry, what am I thinking? It's been bottoming out at 10 cents per share as the floor. And if you look here, it completed a falling wedge, which it broke out of strongly and then established a new leg of support here at 10.5 cents. We'll go ahead and set right here. 10.6. But anyway, this was a strong move of strength that took it above its 20-period moving average on the hourly, and it has it's bounced back down to below 10.7 cents, but it's still holding up here. I'm wondering if this may be volatility from an institution picking up shares. All of this volatility that occurred here was actually the result of heavy short exempts. For the last 6 trading days, there has been almost no short exempts compared to before. Exela was mainly getting hammered in the last in these 4 or 5 trading days between the 21st of June and the 27th. That's where most of the short exempts was happening.
TD.
What's going on?
TD. We're still looking at the short exempts from the Scourge.
Still looking at it. Oh, my
Yeah,
bad,
buddy.
my bad. Thank you.
Wrong
Sorry
screen.
about that. Thank you, guys. I'm looking at Exela here. You should be able to see it. Thank you. All right. So this was the falling wedge that I was pointing out on Exela. Broke out above, got rejected back down to 10.6 cents. This is the volatility that I was referring to where most of the short exempts happened over the last week. Not many short exempts compared to then. My view is that at the moment, Exela is basically just setting up new legs of support right now. Can I maximize this? Oh, I'm on my wrong chart layout. Let me switch this up. Ugh. Ew. Give me a second, guys. I gotta fix this. Okay. Now it's fixed. There we go. All right. So again, like I was saying, This is where most of the short exempts took place. Just had this big pre-market engulfing candle, and then it got smashed down in the next 3 to 4 days. Right back where it started. This is the same volatility that keeps coming in and out of Exela at random times. It doesn't really seem to have any particular pattern to it, except the one pattern that every time Exela announces some good news, suddenly the price explodes pre-market, and then short exempts drag it back down to where it was within 5 trading days. Hey, Kryptonair, yeah, I can check out sends. Nice show of strength, crossing the 200 period moving average. This is the after 2 bottoms. Interesting. Oh, I never even noticed this. This was a liquidity hunt on sends. I didn't even see this happen. This probably happened before I started paying attention to liquidity hunting. I haven't looked at sends in a long time. But this breakdown here, and then the rapid recovery, this is a liquidity hunt. Somebody smashed the price down here, liquidity hunted all of the week longs, and then took the shorts out back on the way up. It looks like they may be setting up to do it again. Nah, I take that back. They've gone and carried it back in the other direction. That is interesting. I'm still holding on to all of my sends. I haven't sold any shares of sends. I've been holding on to it all this time. But at the same time, I'm not averaging down at all anymore. I've dragged down my cost average to, I think it was something like $3. And I've pretty much exhausted the liquidity that I'm willing to pour into this right now. I still think that Sens is a great company with really great technology. Still bullish on them overall, but I just don't have the money to throw into it. However, looking at the technicals, I do see the beginnings of a big cup beginning to form. Might be a little bit early to tell, but we'll see where it goes. At the moment, Sens, what I'm looking for is for their marketing data to get, or their marketing team to get it together and start putting their 180-day product out to market with some new partners. Sorry for the silence, guys. I'm just trying to negotiate a quick position change in my brokerage. Dot. Thank you very much. I appreciate that. Just wait until I get a fancy microphone or something. I'll woo all the ladies on the second circle of hell with my fancy microphone.
I want wooed too.
Come again?
I want you to woo me too.
All right. I'll go ahead and take a look at the days to cover on Biora since somebody was specifically asking for it. Let's go pull this up.
Hey, J-Ruff found an example, but he's being a bit pedantic, I think.
Are you guys having a pissing match right now?
He found it in the Amazon stock split. It doesn't say the words in the form of a stock dividend, but
Gotcha.
you know, it's a bit redundant, that wording. Anyway, my argument is that it does say that for every one share owned, they will be given 19 additional shares. But my new question is, can anyone find an 8K filing of a stock split where the additional shares are given in in a different form? So, like, because you would assume it would be in the form of a stock dividend, of a dividend, because that's basically the definition.
Gotcha. Well, I'll do some more. I'll do some more research. I'll go ahead and ask some people in the industry to make sure that we're staying honest. As far as I know, as far as I knew, it was a split, and that the stock was being just simply divided and issued out to existing shareholders.
Yes.
To the best of my knowledge.
Yeah, I just think there's been a lot of confusion around the...
Oh, without a doubt. It's a confusing subject, and there's a lot of noise on social media. The best thing to do is to really just ask your broker, honestly. Like, the best thing that we can do is just ask the broker. So I'll see if I can call my broker at Fidelity and ask them what the process of the GameStop split will be. And I'm sure they will give me a fair answer. So, thank you to, who was it that asked? FDSX, that's a lot of letters. I'll just call you FD. FD asked about days to cover on Biora, which is currently at 8.89. Now, days to cover is mainly based off of volume versus short short interest. So it's just a calculation of, at the current level of average volume, how long would it take shorts to cover their position if all of them tried to cover at once? In total, it would take 8.9 days, basically, which is a very high days to cover value. I don't put too much stock in days to cover, because if you look back here when Prog really began to squeeze, back when Biora was Prog, the days to cover was only 1.5. The volume had been picking up, and as soon as volume picks up, days to cover collapses. So, and days to cover was 9.2 at one point, and the price went from $5 all the way down to 56 cents. So days to cover doesn't really tell you all that much. It just tells you how many shorts there are versus the volume that the stock is being traded with. So I treat it as just a sign that there's not enough volume in the stock. There needs to be more volume.
Last minute of trading, everybody.
All right, we'll go ahead and switch over to the market. I'm going to go look at SPY and AMC and Biora. We'll go see where it's at. I saw somebody asking me about Revlon. Yes, I am still day trading or paper trading Revlon. I've still got that paper position right there. I am holding it. It's just a paper trade, just for fun. But I've still got my take profit where I had it before. So turning, what was it, like, I think it was like $100 or something. It was like a few $100s into $2,000. That's the goal, anyway. Revlon is starting to show some strength above the 20-period moving average on the 30-minute chart. The consolidation has been nice. It has been trading in this bear flag, but it's broken out of it. And I would say that the tail on the bear flag is too long now for it to be considered a bear flag. The other consideration here is that on the hourly chart, it's part of a very weird parabolic arc pattern, which you don't see too often in the market. You don't see parabolic arc patterns very frequently. Ding, 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 ding. That's the bell. All right. So closing the day on the SPY at, I don't have my, oh, darn. I don't have my daily candles up. Okay, the SPY closed today at $388.47, currently trading a little bit higher in post-market. I have already entered into my positions against the SPY. I'm basically going to, I'm holding several short positions against the SPY, as well as DRV, which is the, I am betting against the housing market by going long on DRV, which is a leveraged index ETF on that basically tracks the XLRE sector. And yeah, that is my gamble, so to speak. Most of those are expiring in August. I am holding on to calls for DRV that expire next Friday. And I'm going to continue holding them, expecting for the CPI print to get ugly on the 13th of July. We'll see how that goes. The market has been unusually bullish this week. It made a lot of green candles, but it was not able to break above that $390 level, and it's since gotten rejected with this tall wicking candle. If this were trading on any other time frame, yeah, I would say that this is this qualifies as a double top pattern for the market overall. So just looking at this, we can see that the SPY created a double top once here with this red candle and a tall wicking green candle a couple days later. Both of these occurred in pre-market session, but nevertheless, I still pay attention to these. And now I see that we have a declining top here on its next leg, attempting to break to the higher high, and failed. And what's more is it looks to be forming a head and shoulders here. So we're getting the beginnings of a head and shoulder. Shoulder here, head here, and then you would expect for there to be another shoulder somewhere here before it breaks down. So we'll see what happens. But as of right now, the SPY is looking weak to me. And we've had a bearish divergence on the RSI that I just noticed here. Thank you very much to the TMA RSI divergence indicator for this one. This bearish divergence here is, to me, signaling a reversal to the downside. So I've already got my positions against the SPY, as well as XLRE, which is the real estate sector index for the Standard & Poor's 500. And I am going long on DRV. If you guys want more details on how to short the housing in the real estate market, you can go ahead and check out my video on betting against the housing market, XLRE, DRV, and there was one other one I was trying to think of, but the ticker's slipping my mind. I think it was SPXS, which that mainly tracks these S&P, but still, it does include some real estate REITs. Biora still creating this long tail, nice strong support here, holding above 68 cents, good close, despite the big red candle at the end of the day, still held above 65 cents, and that's all I needed. Oh no, don't adjust my stop loss, don't do that. So Revlon, again, this is just a paper trade, but I'm still bullish on Revlon. I'm expecting it to hit $10 at some point once it gets a nice sign of strength. There's also been a lot of options traded in Revlon recently. A lot of heavy bullish volume, buying into calls going into August. you can go ahead and check that out on Unusual Whales. If you don't have a subscription to Unusual Whales yet, we actually have an affiliate link with Unusual Whales. If you want to help support the channel, you can actually sign up and get a slight discount off of the Unusual Whales platform. And we will get a portion of your revenue. Or not revenue, but your payments to Unusual Whales. Hey, Magic Potato. No, I actually did not go over BBIG yet, not in detail anyway. So I'll go ahead and cover that one right now. Let me delete this head and shoulders pattern that's getting in the way here. I'll move down to the 15-minute chart. Put up the smooth moving averages and the momentum indicator. So BBIG is still barcoding, but it's showing signs of a reversal forming. Traded above the VWAP and closed above it 2 days in a row. Despite the barcoding, it does look like algorithms are flipping on this one. They're just negotiating and fighting for shares. It also broke out of this falling wedge yesterday, and it's held up nicely. So I was expecting BBIG to drop below $1. I still have that perception that a liquidity hunt will occur at some point and drive a spike down through the $1 level. If that's the case, just to illustrate it, I have a paper trade that's prepared at that level to execute at 10,000 shares for $1 per share. Again, that's just a paper trade, but that's to illustrate to my viewers how to trade a liquidity hunt. My next target for BBIG. Well, I don't really have price targets for BBIG. I just trade resistance and support. But for BBIG's case, I'm actually basically going head to head with Susquehanna, the market maker, who's the designated primary market maker for BBIG. If you missed my due diligence that I published on Twitter and Reddit, there was some conflicts of interest found in Susquehanna, who is the, as I said, the designated market maker for BBIG. They also own a 15% stake in ByteDance Inc., which is the parent company that owns TikTok. And that is BBIG's biggest competitor for their low motif platform. Because of that conflict of interest, there's a vested interest in Susquehanna to basically bury BBIG in deep beneath the crust of the earth, where it will never be seen or heard from again. Because if it is able to compete and steal market share from ByteDance, then that would be bad for their investment. But the thing is that now TikTok is facing an investigation from the FCC, the FBI, and possibly, I don't know if the CIA will get involved in this because it's technically an act of espionage if they're surveilling American citizens. But this has been well known for several years. TikTok is an extremely dangerous and sketchy application. It has permissions to do things that no legitimate app needs to have. One of the scariest things that I found about it, and this came from a researcher that is respected in the InfoSec community from Black Hills InfoSec. That's actually a competing firm with the company that I work for, but I still respect all the pen testers that work there and the security researchers that are elsewhere in the community. And the researcher who I am speaking of is Derek Banks. He did an analysis of the application and found that it requests permissions to do things like, it's able to encrypt the activity that the app is doing while processing data before it sends it over the internet. That's unusual behavior because what it means is that it's actually trying to conceal its operations within the phone so that antivirus and so forth isn't able to read what it's doing, or it at least makes it harder for any antivirus or any analysis to be done on the app's activity. And that's not a legitimate activity for anything. That's obfuscation of the code. Was somebody going to chime in? I heard an echo. Okay. Other things that TikTok is able to do, this was found by a separate researcher who is not named, at least not that I know of, because he only made these statements in comments. But the Reddit user, I forget his name off the top of my head, but I mentioned it in my due diligence on Reddit. I'll leave a link in the description of this stream so that people can go back and look at it. But the Reddit user is a known reverse engineer within the InfoSec community, and he disassembled the application down to its bare bones code, like machine code, which is I respect everybody that does this. It's an extremely complicated process. It takes way too much bandwidth of the brain for me to do anyway. But he pulled apart that application and found that it was able to download and decrypt a custom encrypted payload that is zipped and compressed, disassemble it, and then execute it directly within memory. That is extremely suspicious behavior because that's something that I do in my job as a penetration tester. I will download some code and I will open up a process in memory in order to completely bypass antivirus's ability to scan it as a file and execute the code there. That's malware. That's malware activity. That's how a hacker pulls code down from the internet and executes it directly within the system without the antivirus ever seeing the file. It's extremely sketchy. So anyway, the whole thing with TikTok, this is long overdue. I felt like TikTok needed to be thrown out of the app stores years ago, but honestly, the amount of data that it collects on people, the amount of permissions that it has to your phone, and the way that it transmits data elsewhere back to mainland China is there's so many things wrong with it. And I don't just say that because I'm bullish on Vinco Ventures. I've been telling people this for years before I even heard of Low Motive. I've said for the last 3 years, ever since reading all of this research that was done on it, like TikTok is fucking scary. Nobody should be using this app. And I strongly advise anyone who uses it or who has kids that use it, get it off your phones. That shit is malware by any other definition, as far as I'm concerned. And that's the only area where I'm actually qualified to tell you anything. TikTok, it qualifies as malware. The amount of activity and permissions that it has to your phone is not legitimate. It's scary, the amount of data that it collects on you. Check out the research that was done on it. I've got links to it in my Reddit thread. You can look into that to your heart's content, or you can look up the Black Hills InfoSec article by Derek Banks that describes the network protocol and or the network protocol activity and the app design of TikTok. Let's see. So back to BBIG. Hey, Colin Lee, I see you asking about AMC. Yes, I did cover that a little while ago. I'll go back to it a little bit before we close out the stream, though. So stick around. I'll do a coverage on that. So BBIG, as I mentioned before, the falling wedge has been broken. We've got this area of consolidation here between $1.10 and $1. We'll say $1.20. The consolidation has been pretty narrow, and obviously it's barcoding. So I would say that we don't have much control at this moment. But stay patient. If you are holding on to calls for July, honestly, they're probably not worth much right now. So I would, if I was holding on to calls for July, if they're anything above $1 strike, I'd just say you may as well hold it because you're not going to be able to get anything for it at this point. And I'll show people this actually. Let me pull up my Fidelity brokerage and look at BBIG. So let's see. Can I pull this up on? There we go. Okay. So I'm pulling up BBIG on my Fidelity broker. And this is what everybody has been paying attention to on BBIG's options chain. They see like, oh, they deleted all the options. Panic. They didn't actually. They're all moved to adjusted options now. If you go here to the adjusted options chain, you can find all of the open interest for all of the options. See the $4 adjusted and the $5 adjusted? There's tens of thousands of calls here. And now they're worthless because they were able to drag down the price because retail fucking panicked and everybody just dumped shares simultaneously. These have all become adjusted calls. And the thing about these adjusted calls is that you're entitled to a tied dividend. For every call contract, which is for 100 shares, if you exercise these, you're entitled to 10 shares of Tide. And almost nobody is talking about this. Almost nobody knows this. So there's not a whole lot of them here for this Friday, but next Friday, there's a ton of them. There's a hidden gamma ramp here that nobody is talking about. Nobody knows it exists because it's been hidden, and the market makers are offering dog shit prices for these because they know that nobody else can buy them. Notice that notice there's a difference in pricing for the adjusted versus the standard. There's no offering. There's no offering at all for all the adjusted contracts. Even the ones in the money, the adjusted contracts, the offer is for $0. There's no offer for the $1 adjusted contracts. Susquehanna is the one who is dictating these prices because they're the only ones that can go position open. Only the market maker can do that. The adjusted options are the only ones that you can't buy right now because you can't write new contracts. They're only available to the market maker, and they're trying to close these out. And I'm willing to bet you, there's no way that I can prove this definitively, but I have a good feeling that Susquehanna is the ones who wrote those goddamn contracts, and they want them dead. They want all these contracts. They want retail to sell out of them and get rid of them. There's thousands of these things just sitting here. Also, I want to make mention of this as well. I got in touch with a member of the media. I don't normally do this, but it was explicitly asked of me by the community to take the due diligence, illustrating the conflict of interest between Susquehanna and their relationship as the designated primary market maker of Vinco Ventures, and I brought it to the attention of somebody in media who will be able to at least publish a story if they desire. I'm not going to disclose the individual's name or which media I went to. I'm probably going to try to disclose it to several more if possible. But please be patient and give it time for this to play out. The other thing that I'll also mention here is that the BBIG chain, these adjusted options, they go out much farther, okay? The July chain was huge, yes, but there's still plenty more adjusted options going out every single week. They're still out there. The adjusted are huge. There's thousands of them going all the way out to January. People will be entitled to these. If these contracts get executed, whoever's holding these are entitled to Tide. So if you're holding on to these distant contracts, don't give up on them. Don't take this shit price that the market maker is offering you. You're being offered pennies for something that could be worth hundreds of dollars in the future if you stick to your thesis. Do your due diligence. Stick to your thesis. All right? Okay. So I just wanted to make sure that we got all that out there. I know that it's frustrating what's going on with BBIG, but hopefully that showed you something that you at least weren't aware of before. I'm not advising people to exercise their out of the money contracts. If you choose to do that, that's up to you. know that you are taking a loss by doing that. You are taking a dollar for dollar loss if you exercise those out of the money contracts. But that's up to you. That is up to you. Okay. Let's see, what else do we have? IMPP. I covered it a little bit, but sure, I'll take a quick look at it. So IMPP hit a bottom here at 40 cents, and it seems like it's bouncing here. The positive note is that it qualifies as a double bottom because the body of the candle down here, it had a wick that crossed the body. So we do have a double bottom pattern here that looks pretty bullish to me. The only thing is that it has this huge spike that formed a Head and Shoulders. So, I don't know what exactly to make of it. It crossed the neckline on a Head and Shoulders pattern. So it could go in either direction according to the technicals. As far as fundamentals go, the price of oil, I think, has dropped. The drop in the price of oil had something to do with this, but I don't expect the price of oil to stay down. I think it's below $100 a barrel now. But I'm not anticipating oil to stay this cheap. We're about to go through a major energy crisis, and from what I've heard, Russia is withholding the Nord Stream pipeline from sending natural gas to Europe, saying that it's, quote, under maintenance. Personally, I think that's just an excuse, but that's Russia's way of punishing Europe for taking a stance against them in the conflict with Ukraine. The other thing is that I've mentioned this before, but I think that Ukraine, the pipeline, which is the only pipeline other than Nord Stream 1 that passes through Europe from Asia and the Middle East, it runs through the heart of Ukraine. And if at any point I think that the conflict with Russia and Ukraine goes against the Ukraine, that they'll probably just destroy the pipeline as a way of getting back at Russia. Russian oil is their main commodity, and it's their number one export. If Russia can't get oil out to Europe, it will decimate their economy. The only thing is that Russia benefits from that relationship too, and that's how they get oil as well. If that goes on, then, or what I should say is, if that pipeline gets damaged, then you're going to have oil backed up in that pipeline all the way out to Siberia, where it will freeze, gelatinize, and likely cause more damage because of, thermal expansion can burst those pipes when petroleum gelatinizes from the extreme cold. Russia is cold and winter's coming, so if those extreme cold temperatures hit that pipeline while the oil is no longer moving, that thermal expansion can do damage across the entire pipeline. It would absolutely devastate Russia's economy, and it would cause oil price to rise overnight. As that relates to IMPP, the point that I was getting at, IMPP is the only other well, it's not the only, but it's one of the major shippers that are able to take oil by ship out of the Black Sea, and they're headquartered in Greece. So that's the perfect route. They can go still, except for like that sliver of land up at the northern corner, right beside Denmark. But anyway, you get my point. IMPP is a great candidate to capture that market share for oil shipping, if for whatever reason the pipeline to Europe is damaged or backed up. And if oil goes up, their services will be in high demand. Dennis Pham, I can't sell my adjusted BBIG. It just lets me roll. How do I exercise? You will need to call your broker. If you wish to exercise, you are going to have to call your broker. Get in contact with them by phone or online chat, whatever you got to do. If you want to, I'm not telling you that you should. I'm just saying if you want to, you have to call your broker. Tried to sell my 250 calls today, couldn't get anything. Expired worthless. Sorry to hear that, homie. $200 oil. Audrey in Alaska. You know what you're talking about on the oil. We have the same thick oil in Alaska, and it's dangerous to let oil freeze in the pipeline. Nice to have some affirmation. Thank you. I didn't come by that information by myself. I didn't even think about it until I had encountered a video by a gentleman who runs a YouTube channel called Clear Value Tax. He's actually petitioning to become a politician in his state, but he was talking about when the economy will, quote, crash. And one of his big triggers was the oil pipeline in Ukraine bursting or exploding due to sabotage or just collateral damage due to combat. But whatever the case, that was his marker for a trigger of cascading and contagion effect of rising oil prices putting pressure on the entire economy. And it makes sense too, because if oil prices rise, then everything rises. You have rising diesel prices, rising gas prices, rising plastic, everything. Every single oil product. If oil by the barrel goes up in price, everything hurts, especially logistics. And right now, we're having an already strained supply chain problem across the globe. So if oil prices go up, like that's it, man. The economy is going to have a really hard time getting product anywhere. Nobody wants to sell anything. Inflation's through the frickin' roof. It's all bad everywhere. So yeah, oil could very easily be the last nail in the coffin. If oil prices spike up to $150 a barrel, dude, forget about it. Okay, I see Devloba asking about ENDP. We can check that one out. I know a lot of people are really pushing this one. I did call out a liquidity hunt here. It looks like it happened. Or rather, it was just a demand zone, really. Not quite a liquidity hunt. The liquidity hunt is down here at the 33 cent level. If I see ENDP get spiked down to 32 cents or below, then I'll be interested. This high volume here, this is nice and all, but it's forming a triangle, okay? It's an asymmetrical structure. Now, it is setting up higher lows. It could keep going, but what I am looking for is I'm expecting market makers and other institutions to hammer the price. So I'm going to trade based on my thesis. Technicals look good. It's bounced off of these lower levels. It's establishing higher lows. Had a nice spike in volume on the 28th of June. All good signs from a technical standpoint. On the hourly chart, it's just about to cross the 200 period moving average. On the first cross, I expect a rejection. So I'm still expecting it to get smacked down. When I see that happen, then I'll consider buying in. But right now, I feel like it could go in either direction. These symmetrical structures that it's, or an asymmetrical structure that it's forming, doesn't really have a bullish or bearish outlook. And just based on everything that I know about market makers and how they behave and how the institutions trade, my view is that if they are bullish on this company for any reason whatsoever, they're going to get it for the best price they possibly can. So they're going to use psychological warfare to attack the share value, drop the price rapidly just by algorithmic shorting, try and shake out retail and convince everybody, oh, the sky is falling, and then scoop up all of your shares and run away with it back up above $1. Just my 2 cents. So if you're going to hold something like this and you're really that convinced that the company is good for a gamma squeeze, you're going to need to expect that volatility and be ready to average down and grab those dips. Take advantage of them. Don't worry about 10-cent dips or like 10% dips. No, I'm talking like when they suddenly smash it by 50%, that is your dip. The dude at Clear Value Tax is really smart. Yeah, melting. I respect the guy. He's actually a really intelligent dude. He's very well spoken also. I don't know what party he, speaks for, but at least his grasp of economics is pretty solid. Thoughts on Mullen? I covered Mullen a little bit earlier today, but yeah, the volatile move here, very nice. It's forming a bull pennant. Well, more like a bull flag, sorry. But a good sign nonetheless. What you'll be looking for is for Mullen to continue its move into next week. I'm pretty bullish on Mullen. I was expecting it to get dropped below 90 cents as a possibility, but since that liquidity hunt that happened in the morning of the 1st of July, that pretty much was the signal that they were going to take it back in the other direction, and it looks like that played out. So we'll see what happens next week. Be on the lookout for unusual whales prints and alerts for any shares, calls being traded with a strike of $1 or less. If there is any chance of market makers covering on their short positions, you're going to see it done through a large transaction of deep in the money calls. The only calls that they can get are for 50-cent strike and $1 strike. It's probably going to be the 50 cents just because the delta will be the highest on those. So if you see that move, that's your sign that market makers are going to try to cover shares with in the money calls just by exercising and immediately delivering. Okay. Groupon. It's been a long time since I looked at Groupon. I am somewhat interested in Groupon, but I see the way that it's trading where it just keeps getting hammered down. It'll have these big volatility spikes and then it gets liquidity hunted and smashed down again. So I would wait until like maybe $9.50 before even thinking about taking a position. On the daily chart, Groupon is like just hammered way down, and you have this big head and shoulders pattern here on the daily chart. If you look at it here, this right here, one big head and shoulders. So yeah, it's not in the greatest of shape right now, and it looks like it is playing out to the downside. So for me, Groupon, despite being heavily shorted, is still on the downtick. I don't think I'll be playing this one. It's not showing any strength whatsoever. Thoughts on GMVD? I saw the move today. Nice, strong move. Establish those higher lows. It's still uncertain. I actually need to check up on the. Short exempt data. I'll go ahead and queue that up from ScourgeBot. If you're not familiar, ScourgeBot is our data analytics tool that lets us know everything going on between FINRA data, short data, options data, and options flow. We have it. We have an alert system that'll let us know when companies declare bankruptcy or when the FDA announces a new approval or denial. It's all kinds of excellent tools for getting alerts on big moves in the market. Okay. So the thing that I notice here is that GMVD had a massive short exempt ratio spike here on a low volume day. The short volume was at its lowest point here at 28% of total volume. The short exempt of total volume was still 5.2%. That's a huge number. Anything above 3% short exempt over total volume is massive. The short exempt ratio is just short exempt divided by short volume. I look for 3% in short exempt ratio to tell me whenever a market maker is playing around with the stock. And consistently, GMVD has been getting smacked around below the $1 level. If they can get their share price above $1, I think that could be the chance they need, that breathing room to run free. They need to be trading above $1 for 10 consecutive trading days in order to get off the Nasdaq's delisting shit list. If you notice that the big moves followed after these short exempt ratios became ridiculously high, especially on the high volume days. But this is the one day that really stuck out to me on June 13th when the short exempt ratio, it was only 2.7, but the amount of volume on it was huge. And obviously it jumped up from a close of 34.5 cents all the way up to a close of 65 cents. Did you have some thoughts, Dave?
I was just going to ask you to remind me what the technical term was for the second derivative of short exempt ratio.
So the you're talking about these here?
The second derivative of short exempt ratio delta.
So the short exempt ratio delta rate is tracking the change in short exempt ratios from one day to the next. So it's just simply, it's a calculation of the rate of change between the day before and the current date. And then the short exempt ratio delta 2 rate is the delta it's the delta of the delta. So it's tracking these changes.
Yes. So the second derivative.
Yeah.
But there was another term for it. I just couldn't remember what it was called.
Yeah.
It's something Virgin.
We call this a mirror signal when the delta rates are extremely high and mirror each other in value, or at least closely mirror each other. They're usually not a perfect 1-to-1 value, but this is close enough. This qualifies as a mirror.
I wasn't sure to say the name of.
Yes, it used to be. I have yielded to Todd's request to stop calling it Toddvergence. But that'll be my last time, I promise.
My question.
Yeah, we'll continue to call it a mirror signal, a short exempt mirror signal. But anyway, the mirror signal tends to signal a squeeze within 30 trading days of its occurrence. So whenever we see this, we start paying very close attention to the stock, especially if the 5-day simple moving average delta rate is higher than 5%. That tells us that there is volatility and bullish momentum in the stock. That typically signals a squeeze is on the way. Okay, I've got a few other requests for Weber. I have been tracking Weber. Still bullish. The momentum in it is nice. Today was a bit of a sideways day for it, but it's still trading in this channel, and I'm still very bullish on it. Overall, the shorts are still pretty heavy on it. Let me go pull up the short data on Weber because that's where the money's at. So the short data on Weber, the days to cover is currently sitting at about 8.2, which is, pretty good. Volume's low right now. Security lending volume has been tapering off quite a bit, which leaves it some room to run. The open interest for calls versus put is pretty much break even at 1-to-1, so about pretty balanced. But it's been in decline, which means that there are more calls than puts lately than there have been in the past. And with the short interest ratio rising to a massive 60% of the free float, 60% of the 60% of the free float is currently sold short. That's a huge opportunity for a squeeze. Weber right now is valued at just over $8. I easily see potential for this thing to get nuts, especially with their earnings coming up right after a big sales season for the spring. I'm telling you, everybody that was in the pandemic right now, if there's anything that the first thing that I did when I bought my house, just little backstory. I bought a house in 2014. I had that house for 5 years. The first thing that I bought was a Weber grill because I had very little money to work with. I had just switched jobs. I had just bought a house. I had to get acclimated to being a homeowner. And the first thing that I did was buy a grill because I wanted to enjoy the space of being outside and no longer being stuck in an apartment. I'm living in an apartment now because I sold my home a couple years ago. But nevertheless, that Weber grill, I love that thing. And it like Weber's just, I don't know, there's some nostalgia factor with it. But American culture, for those of you living across the pond, we love grilling outside. It's one of our favorite pastime activities. It's cheap. The grills are extremely inexpensive. They make the fancy ones too, but like the traditional Weber grill that you think of with that little red body on 2 sticks it costs $60. It's a cheap grill, and it's grilling season. And right now, people are hurting for cash. Right now, meat's a little bit expensive here in the States, but overall, like I still see people like grilling outside all the time, even where I'm currently living. It's a nostalgic brand. It's a valued product, and it's an American product, and that has value here. Americans are particularly supportive of their domestically made products. Weber Grill being a classic example. So right now, as you can see, this stock has been utilized, maxed out on shorts ever since the 10th of February, and it was teasing it ever since the 2nd of November. This stock has been in decline for almost a little more than half a year. The short interest is not justifiable, and with the amount of shares that are currently on loan, which the amount of free float on loan is only measured at 34%, which doesn't make sense since the free float is 60% sold short. Any way you slice it, this thing is heavily shorted. And the company is actually kind of like shaking those shorts off, and I'm expecting their earnings to be pretty bullish. So at the moment, Weber is showing a little bit of strength. They've had they had a disappointing earnings, but I expect next earnings to be much healthier with this reporting their first quarter earnings, which is the beginning of grilling season. You know, everybody starts buying their grills in March, and you had a bunch of new homeowners, so new people coming into new homes, and probably being a little bit strapped for cash. Grilling is a cheap alternative to going out to a restaurant. So I'm pretty bullish on Weber. I just love their product overall. So I don't know, what can I say? I just like it. In any case, Weber is making a few bullish moves right now. The STC indicator has gone green, which is a nice start. This is only the beginning, so the next bullish move could take it above a $10 price level in the near term. This thing's been making really volatile moves lately. The last time that the STC indicator went green on the daily chart, it started at a open of $6 or $7, excuse me, and it ran all the way to a high point of $12.25. And that short interest is still there right now. So a lot of those shorts are stuck in their positions, I feel. Most of them are trapped if the price of Weber goes above $10. So any shorts that are in at any shorts in their positions, $10 or less, are going to be underwater if that takes place. MACD is just about to cross. It's actually crossing today at close. So on Monday, I'm expecting Weber to be very green. The next earnings period is going to be announced in September, so that's going to be the period ending in June. So that will close out their main sales season. So quite a while until we get that earnings report, but just based off of the foot traffic from sales of grilling products on Home Depot and Lowe's, you could probably find some indicators that Weber will do well this season. Man, I'm getting so many ticker requests. I'm going to have to speed these up. I already covered Revlon. As I said, it's formed a bull flag, which it's now breaking out of. So the breakout has already taken place. It's in consolidation now. I would expect it to challenge the $6.60 level before breaking out and hopefully make it to $10, which is my take profit level on my paper trade. I have a separate I have separate prices marked out for my personal take profits, but that's how I would be trading this one as a swing trader if I were playing with stop losses and take profits. My big indicator, if you're curious for why I took that position, was I waited for this breakdown in the price. This is what I would consider to be a liquidity hunt. This took place on the 29th of June. There was a big heavy spike down on the 15-minute chart, and then if you track the candles, 1, 2, 3, 4, 5, 6, 7, 8, 9 on the 9th candle, it broke back above and reclaimed support. So this meets my criteria for a liquidity hunt, and you don't know it here from looking at it, but this was previously a very heavy liquidity pool that was touched and crossed below, and then it broke back up above support. That is because of heavy trading activity that took place back here that marked out that price level. So this liquidity pool was dipped into twice and rapidly recovered, once during the trading day and then once in pre-market, and then it broke above the next day. So I took my position the following day because I was a little bit late. I wasn't trading this day, but I did take my position here. This is where my entry was at, and as you can see, currently up on the paper trade. It is just a paper trade, though, so just don't get too excited. Trade according to your own risk model, not mine. All right, I'll take a look at MMAT, and after these last few tickers, I'm closing ticker requests. No more ticker requests. I'm going to have to close the stream here in about 10 minutes. So MMAT, oh my God, it's Barcode City. Holy shit. So MMAT, I saw it had this bullish move and then just suddenly got rug pulled hard. I don't remember what happened here. Was this a news announcement? 24th of June. $50 million in securities sold to investors in a direct offering. Shares plunge. Okay. Well, that explains it. All right, so MMAT, I'm guessing, is hurting for cash right now. I think that what would probably help better is a fundamental analysis of this one. It's bouncing off of support right now. I'm expecting that they actually probably made some good money off of this offering. Did they actually close that offering? Doesn't say. Somebody let me know if the MMAT offering closed successfully. If that's not the case, then I'll be looking at. I might be looking at when it's setting up for support, but it looks like it's at support right now. It's hovering at $1 and doesn't seem to want to break below. This is the lowest that it's traded at, and it kind of looks a bit like an island pattern. The only bearish thing that I see about this is that it broke down a double bottom pattern. It had the chance to become a double bottom, but it didn't recover, so that's not a good sign. We're also trading well below the 200 moving average, so the trend is very much against you. My initial thoughts are you should probably hold off on making any changes to your positions. I wouldn't be adding here. I would wait to see how the stock reacts to the $1 level and see when that offering closes, what the result of that is. It will, if it's a successful offering and they got their entire target that they wanted to make early, then that's great. The price will probably move upwards in reaction to that news. But if they have an unsuccessful offering and they don't raise the money, then you're looking at a seriously bearish situation where there was no demand for the stock, and you'll probably see it break below $1. At the moment, there's not really a lot of positives for it in the near term. Keep an eye out, though. I will also do the same. Currently trading in this box. I'll be looking to see what it does. If it bounces off the bottom of this box, then I'll expect it to, at some point, trade back to the $2 level. All right. That covers MMAT. OCGN. I used to trade OCGN a long time ago, but I've gotten kind of jaded by this stock. I know that's not a healthy mindset, but I got rug pulled badly here with OCGN here and here. So that was early on in my trading where I started trading these meme stocks, though. So I've learned a lot of lessons since then. So I may take a look at this one again. Let's go see what it's doing on the hourly. Okay, I see the I see the move, big pull and a flag. That's pretty bullish. Yeah, that's bullish. Traded on a bear flag and broke out. Big pull, flag, breakout, consolidation, finding its bottom here at $3. That's a good setup. I won't lie to you. It's a good setup. It's trading back above the 200 period moving average on the 30-minute chart and the 1-hour chart. The daily chart is still going to be well below the 200, though. I know this thing got hammered back in December. As I recall, these guys are doing the... oh, I see. They're awarded the U.S. patent for treatment of retinal degenerative diseases as of June 13th. That's some good news. I see that the price moved significantly already off of that news. If you're in it, my thoughts are you can ride it out and just let it print until it finds some weakness. It's already at the 50-period moving average on the daily time frame, so it might get rejected here. If you see consolidation and a breakout above, then I would trade it to the 200 moving average at around $5.50. You guys do what you think is right. If you're bullish on the company, then do what you think is right. The other possibility, I just noticed this, but I see the makings of a cup. So keep an eye out for that. It's very possible you may see the completion of a cup here. Do I still have BRQS? No, I do not have BRQS. I disposed of that position quite a while ago. I'm not bearish on BRQS, but it's hard. It's my stance on BRQS right now is neutral, just because they've gone through their split, and I need to see them close 3 more days above $1 for them to get back within NASDAQ compliance. Until that happens, I am not taking a stance. The barcoding is not encouraging. But like I said, the last day, let me go ahead and we have to mark it out since the split. So this is the day of the split. We need to mark out the 10th day. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So on July 5th, it needs to close green above $1, July 12th. July 12th. So if it closes above $1, July 12th, that will make me happy. And then I'll be looking for any indicators of volatility and bullish momentum. It did break a descending wedge here recently that I was calling out. So that's a good sign. But it is doing it via barcoding, so that's not good. Barcoding is not a healthy thing for a stock to do. It's just telling you that algorithms are the ones trading this, not humans. I just got an alert on something. Definitive proxy, what? Oh. So I just got this breaking piece of news from Cap Moore's. Remember that Nikola trade that we were talking about earlier today? There has been a DEFA 14 amended form submitted to the SEC for Nikola. Let me go pull up my Fintel and go see what the submission is. Yeah, I myself don't know what that is for sure, but I need to know. Proxy statement. Here we go. Proxy statement pursuant to Section 14 of the Securities Exchange Act. We're going to do some oh, I see. This is a formal request for proxy vote. I see. All right, so Nikola is urging shareholders with a definitive statement to please cast your vote in the proxy statement to vote yes on proposal 2. This is basically Nikola begging shareholders to authorize additional shares for issuance and dilution. It does not mean that they will dilute as soon as they get the shares, but getting approval to authorize new shares will be good for the company because Nikola is in need of financing, and in order to do that, they need to have equity. So in order for that to happen, Nikola is going to need to authorize 200 million additional shares. That will bring their outstanding shares up from 600 million shares to 800 million. Stated here. All right. This will provide Nikola flexibility to support the future growth and development of the business. Stockholders have overwhelmingly voted in favor of Proposal 2. However, the company is less than 2% short of the outstanding shares needed to be voted in favor for Proposal 2 to pass. So, Nikola has adjourned the meeting to allow stockholders additional time to vote. The deadline is July 18th. I don't hold Nikola, and I'm not going to persuade anybody to take any particular action in either direction. But I will say that for a company like Nikola, which is an emerging growth company with limited access to financing options and in an environment where interest rates are rapidly rising due to the Fed's actions to raise the federal funds rate, it's going to be hard for Nikola to survive without the ability to dilute shares. So if you're bullish on this company, it may be in your interest to authorize these additional shares. It's not a comfortable conversation when you talk about dilution because, yes, it does deplete equity value in your shares today. But if you want Nikola to survive, it is in everybody's best interest for them to have access to equity for sales. So I don't always stand in favor of dilution, but in this case, I think that they do legitimately need it. Nikola is a company that I am personally bullish on. I just haven't traded their shares in a very long time because they've been in decline for a while. And this is the first real consistent week of bullish momentum that they have sustained, and it is sustained bullish momentum while they are screaming from the mountaintops, please authorize these new shares. We're so close to getting approval to authorize new shares. We need this for financing. I think that shareholders should listen to them. If this gets approved, I think that you will see an immediate reaction from shareholders and you'll see a response in the market. If they do get this authorization of new shares, it will give them options, and that will be good for the company. They probably won't dilute immediately, but just the news that they get authorized these shares could be good for the stock in the short term. just to make sure that I'm staying honest about the whole thesis. Let me go check out their earnings, which has been better than expected. They have been beating earnings, but their earnings is still negative, so they're losing money still. Their net income is negative $690 million last year. On the quarterly basis, they've been losing about $160 million every quarter. They lost $267 million in the third quarter of 2021 alone. So they're still losing money. They still need financing. This meets all the definitions of a zombie company, but notice where all of their cash comes from. It comes from financing. So they're running out of options. They need cash from share sales in order to keep going. It seems to me that they're close, but they are going to need help from shareholders. So it's a risky bet to take. Everybody's got to, make their own financial decisions. But if you're a shareholder in Nikola, you should at least think about it. Okay. What do I think of the delay of vote on BBIG? Oh, sure, Melting. So my thoughts on BBIG, I'm really torn because I know that BBIG needs shares authorized in order to continue operating. And it is in their interest to authorize additional shares. What I've taken issue with is the lack of support for retail that the executive management of BBIG has. They've never made any definitive statements or acknowledged the influence of retail shareholders that have literally propped up their company. There are multiple retail shareholders and investors that have been shouting about how good of a company this is, and being a free marketing campaign in their favor, and they have largely ignored that benefit. And in addition, they've diluted their stock at critical times where it was not in their favor to do so, and directly hurt shareholders while the stock was actually doing well and it was actually performing well. And they just suddenly pulled the rug out from under everybody, and they've repeatedly made delays to their announcements, and they've hyped up people. So they've used retail to hype up their stock, and then they just at the last minute pull the rug out from under everybody and then tell them, we're not ready to announce this yet. At the last fucking minute. And that's frustrating. And that's not how you ingratiate yourself to your retail shareholders or any shareholder. If I was holding millions of dollars worth of stock in BBIG, I would be pissed. I'm still pissed. So that's why I'm so angry at the BBIG management, because they've been using retail as a crutch to prop up their stock, and then they promptly kick us in the nuts every time they get what they want. And I'm just taking a stance of, fuck you. You don't deserve your raises. No, I'm voting no on your raises and your bonuses. I'm voting no on the dilution until you make a statement that you will not dilute on retail shareholders for at least an extended period of time, and that you will commit to your deadlines that you set for yourself. And that if you violate that deadline, then you need to pay a dividend to your shareholders, because you are punishing them for buying into your stock, and you're fucking people over. And you're doing it you're using hype. You're using hype and cheap marketing tactics to get a bunch of people to buy your stock before you rip the rug out from under them. It's fucked up, it's wrong, and it's manipulative. You're costing people money, and there's many people whose lives have been ruined because of their fucking irresponsible marketing strategy and their hype speech. It's pissed me off. It's a good company. They have good acquisitions. They have good equity, and they have plenty of ways to make their company profitable, but they're fucking over their retail shareholders, and that's what pisses me off. and they've been ignoring us on our problem with Susquehanna for a while. They finally acknowledged it. So at least maybe they started paying attention to their retail shareholders who have been trying to fight for them despite getting kicked in the dick every single time they back out on their deadlines. I'll tell Ted Farnsworth to his face he's a fucking prick. I don't care. The number of times that he has broken a promise is inexcusable for any executive. His shareholders should be pissed with him. And Lisa King did the same damn thing with the latest Cryptide dividend, pulling the rug out from under everybody and saying, hey, we have to wait for another month, and waiting till the last minute to do it. That's not how you serve your shareholders. That's not how you do it. That's how you ruin people's trust in your company and your leadership. And the fact that you're only talking to your board of directors and your institutional shareholders before you make these decisions is going behind the backs of everybody in the retail community that have been propping up your fucking stock.
Metamaterials comes to my mind.
Yeah. Metamaterials is guilty of the same damn thing. And their stock got punished for it. MMAT got punished for the same practices.
Yeah.
They hype up their partnerships and their acquisitions, and they talk about, oh, we've got all these great things going on, and we're going to be making these announcements. And David Michery from Mullen, he did the same fucking thing with this latest F500 van delivery. The Fortune 500 company that supposedly had a contract to deliver a bunch of cargo vans. And he did the same damn thing. He said, oh yeah, we'll announce before the end of Q2. And silence the entire second quarter. Never said anything. It's stupid. And now the Cryptide dividend is a total botched mess. There's still people who haven't received their dividends. Somebody should be screaming. Whoever is organizing this, whoever is actually managing the sale of shares on behalf of BBIG, should be absolutely screaming in the faces of every broker who hasn't delivered that dividend to their shareholders. Right now, Fidelity, TD Ameritrade, E-Trade, all of them, their phones should be ringing off the hook from angry IR personnel from Vinco Ventures because they haven't delivered their stock that was owed to their shareholders. I'm mega frustrated. I'm mega frustrated with the Vinco management team, Zash Global, all of them. They're all the same people. If somebody wants to share my thoughts, I'll clip this video. I'll make it a highlight, just so that Ted Farnsworth can get a piece of my mind. He's betrayed his shareholders multiple times, and it's because of us that his stock even squeezed in the first place, because we brought attention to it at the right time. If retail wasn't fucking paying attention, your share price never would have reached $12 for you to dilute on our asses. You're a fucking dick. You're a dick.
What a fucking dick.
What a fucking dick.
I mean,
I'll clip this out. I'll clip this out into a rant to go and share. You guys can send it to his email. I don't care. Email it to him. I think Ted Farnsworth is an asshole for what he did to us.
I wasn't in on a whole BBIG thing, but he sounds like a fucking cunt. Oh wait, sorry, that's too rude for Americans, isn't it?
I don't think Americans even know what a cunt is.
Oh, that's all right then. They don't know what a bum is either. Wait, no.
A hobo? Homeless?
I completely said the wrong word.
Let's see.
Fanny was what I was thinking of.
Oh, I gotcha. Yeah.
Well,
Yeah, we have that too. All right. So
yeah,
I'm looking over the I'm just looking over the chat to make sure I didn't miss anything else. I'm about to close out the stream because I got to go ahead and finish some work. But yeah, I want to give a shout out to Cap Moores, who decided to DM me personally today. He's been out for personal time for the last couple of months. So it's nice to hear from him, and thank you for the call out on NKLA. Just last I guess coverage of the NKLA DD that I've done just today. We are trading within a falling wedge that does appear to have some bullish momentum on this daily time frame. Right now, NKLA is focused on getting its proxy vote out and getting approval for a increase to its authorized share count. I do feel like that's necessary for the health of the company, so that would be beneficial. The short-term outlook, for whatever reason, somebody bought a ton of calls in Nikola. So I'm just let me go pull that up. It's here somewhere, I swear. Yeah, a whole lot of bullish premium in Nikola calls purchased right at the end of each day. Well, actually, a bunch at the end of the day on July the 5th, a whole bunch in the morning of the 6th and 7th, and then again at the end of the day on the 8th. So a lot of bullish floor trades to the tune of more than 30. Yeah, let's see. It's like 120,000 call contracts in Nikola stock. Jesus, how many shares is that now? My brain's not functioning. I can't calculate it. Don't make fun of me. 12 million shares. 12 million shares traded in calls at the money, expiring today, next Friday, and the Friday after that. So I'm guessing that these were all exercised, or maybe they were sold. I don't know. What did Nikola close at? Closed just below. It closed just below. They probably exercised it anyway. It's so close. They probably exercised it anyway if they wanted those shares. The other thing to mention is that right now, NKLA is on the has the highest OI increase on the July 22nd calls. That's expiring 14 days from now. It was an increase of 400,000 contracts. And it looks like they rolled out from the July 15th that were expiring next Friday. So whoever this floor trader is, they got out of these calls and they got into these calls, which is interesting. So thanks again, Kat, if you're listening. Really appreciate the coverage and letting us know what's up. We will continue to monitor Nikola's situation and all the other stocks that we've been paying attention to. I guess that's going to have to be it for me. I got to get back to work and go finish some of my reports for my clients and make sure that they're still happy. Thank you guys so much for joining us for this live stream. Hopefully we'll get to do it again next week. Until then, y'all have a hell of a weekend. Peace out.